What you're about to hear is straight up brotherly advice. It's not tailored for everyone, and if I offend you, then I do apologise from the start. It's an opinionated viewpoint because this is the exact same advice I've given to my younger sister when she asked me for some tips about buying her first home. And it's also the advice that I wish I heard when I was younger. Quick backstory, I came to the UK when I was 7. I didn't speak a word of English and I came up in a poor upbringing. However, by the age of 25, despite all of the challenges that I had growing up, I bought my first home, and that was a 5-bed semi-detached. Later on, when I was 30, I bought my dream home, which was a 5-bed detached house. And I'm not saying that to brag, I'm just saying it so you can know what's possible. If a kid who sounded like Borat for most of his teenage years can buy a home, then you can too. Hello, my name is Muco, nice to meet you. Please subscribe to my YouTube channel. Look, I'm not a financial advisor, I don't claim to know everything, but the advice I'm about to give you is through lived experience. It's not theoretical and it's not neutral. I studied finance at university and money excites me, and I know that there are people out there like my sister and like my younger self that would have loved this advice. Here's why I get fired up about buying your first home. My parents worked hard their entire lives, but they rented for over 30 years in the UK. Meanwhile, their friends, they bought a home, paid off a mortgage, and the equity growth has just been explosive over the last 30 years, as we all know. And my parents, after all of those years of paying rent, have nothing to show for it. Just more expensive rent as retirement nears with little left in the pot. Watching that broke me growing up, and it still breaks me to this day, to be honest. One of the biggest reasons that I went to university and studied finance. I promised myself that I would learn about money, and also I promised myself that I would not let rent drain me the same way it's drained my parents. Don't get me wrong, if renting makes you happy, great, good for you. But let's not sugarcoat it. Renting your whole life will leave you broke. Yes, there are ways that you can make renting work that will actually be better than buying a home. Theoretically, when renting, your monthly rent cost should be cheaper than your mortgage cost. And that difference, if you put that away into an index fund or a stocks and shares ISA, can outweigh being a homeowner if done correctly. But most people, the majority, don't do this, and neither did my parents. Going back to why I hate renting, over the 30 years, my parents paid approximately 300k in rent. However, their friends bought a home for 150k, and now their home is worth over £500,000. It's fully paid off, and yes, they had to pay some interest. However, now their home is their pension pot. So that's it. That's why I hate renting. My parents would be in a very different position right now if they bought a home, and instead of paying someone else's mortgage, they were paying towards their own. And this example in itself blows my mind, how people can argue that renting can be better than buying. For the average person, it won't be, and that's why I don't like renting. And look, I understand everyone's situation is different. Some of you won't ever be able to buy a home, and I'm truly sorry that the system has failed you, and others just don't want to buy. And that's fine. And the other side of that are people that actually own multiple homes. And in the UK, that's 5.5 million adults. And that alone shows that life's not fair. And neither's my brotherly advice. Right, so when I was speaking to my sister, the first thing that I told her to do is to check her credit score. If you've got a poor credit score, then forget it. You ain't buying a home. Not anytime soon anyway. So check it, and if it's not good, then it's time to get improving. If you want to learn more about credit scores and how to check yours today, you're in luck. I've created this video linked here that should help you with more credit score advice. The second thing that I told my sister to check is how much the banks are willing to lend her, and also what the monthly cost of that mortgage would be. I advised her to look at a mortgage calculator. Every bank typically has one. However, personally for myself, I like the Halifax one, and I'll link it in my descriptions to check it out. But as mentioned, any bank does the same thing. Punch in your numbers, so it'll be stuff like your salary, your debt, if you're applying by yourself or with a partner, what the house price is, and how much deposit you're placing down. This mortgage calculator will give you a ballpark figure of how much you can borrow and how much your monthly cost will be. The third thing is, how much money do you actually need saved up before you can think of buying a home? I'm going to explain what they all are, but let's take a house price in the Midlands, which is around 200k. As a couple, you'll probably need around £15,000 all in. That's your 5% deposit and all the other fees that come with buying a house. Let's break that down. Firstly, let's start with the deposit. So the deposit is the percentage of the value of the house that you'll be placing down. So for a 200k house, the 5% deposit would be £10,000. If you've got enough deposit to stretch you to 10%, then do so, because that will probably save you around £100 a month. This is purely due to the interest rate being lower because you're putting more money up front. So from a bank's perspective, they find that more attractive. The more deposit you put down, the better it gets. The other big factor is stamp duty. The good thing about a first-time buyer is anything under 300k, you don't actually have to pay stamp duty. So the example I gave of a 200k property price, the stamp duty for that will be 0. That being said, anything over over 300k, you're paying 5% stamp duty. So if you're buying a property that's worth 310k, that 10k above the 300,000 is what you pay stamp duty on. So it would be £500. Moving on to the solicitor fee, I would probably budget around £2,000 for this. The solicitors will handle all of the legal stuff. They'll make sure that the buyers that you're buying from legitimately own that home. You have all the right documents as well. You don't have to worry about that. That's a good thing. It's £2,000. It's a lot of money. However, you don't think about anything. Everything's sorted for you. Another thing to budget for is the house surveys. This will probably cost you around £500 to 1.5k depending on the type of survey that you get. House surveys are more applicable for older homes, but if you're buying a new build, you don't typically need one because when you move in, you have the equivalent of it, which is a snagging cost, where a professional comes in, views the house, looks at any little defect with your house, reports it, so then you can go to the home builder and say, this is what I'm not happy with. The new build provider that we moved into have been great. They gave us up to 2 years to report any problems that were classed as snags so they could come and sort it out for us. Another thing to budget is cost of moving. Of course, you might have to hire a moving company to help you out. You can rent out your own van or move with the help of your friends and family helping you on moving day. For this, just budget around 300, but that's going to be different depending on where you're moving to, how far you're moving, and so on. Another fee is the mortgage broker fees. Some actually charge you a fee for this. The others get paid a commission by the bank after you've got the mortgage out. A tip I'd give here is just make sure that the mortgage advisor that you have is independent in the market, which means that they can look for the best deal throughout the whole market for you and they're unbiased. Another fee is the mortgage valuation survey, and this typically costs, I would say, around £300. So if you add all of those costs up, that will probably bring you to around £15,000. Quick word from my sponsor. This brand is fantastic. Just kidding. No one's paying me yet. All right, moving over to the next bit of advice I gave my sister. Freehold versus leasehold. At first, when you're probably looking at buying a home, you're going to be like, what's the difference? And in my eyes, again, this is opinionated, freehold is the way you should go. Completely avoid leasehold if you can. And it's a shame because 1 in 5 homes in the UK are actually leasehold. And the reason I don't like leasehold is because you don't own the land the bricks are built on. So you have to continuously keep renewing the lease. And one thing that I really don't like about leaseholds is the maintenance fee. The maintenance fee is quite a big portion of your monthly fee, but also it continuously rises and it can get to some extremely high costs just for maintenance. You hear some horror stories about leaseholds as well, where tenants are actually trapped, they can't sell their homes, so they would have been better off just renting. Anyway, moving on to the next topic that I spoke to my sister about. This is location. What I would advise here is think long term. Don't just pick a location based on where you work currently and where your current friends are. Try to think long term and future proof. And the word future proof is probably going to be used a lot on this channel. Here's my story about buying my first home. I lived near London in Luton and I met my wife down there. After a year, we actually looked at moving in together. However, for me, renting was not an option at all. I'd rather stay with my parents, help them out with their rent, but also allow me to save more money monthly. And the more savings I had, the better deposit I would have buying a home. So we discussed buying a home and she was on board. We looked in North London, but our budget would not afford us a lot. And as she's from Birmingham, I actually suggested, why don't we look in Birmingham? At first, she didn't want to. Her friends were down there, she had a job down there, and the life that she'd built for the last 5 years whilst at university is down there as well. And it was actually the same for me too. All my friends were down in London. I had a job down there, my family were down there as well, so it was actually worse for me to move to Birmingham. But I asked her to keep an open mind and just to look at some properties. We viewed some houses up there and we were sold. In London, we were looking at a 2-bed flat. However, in Birmingham, we started looking at 4 to 5 bed homes, which is a huge difference. Not only the difference in number of bedrooms, but the quality of life as well. And that's an example of future proofing. The easier option would have been to stay down in London, stay in our comfort zone, with friends, with family, our full-time jobs. Here's some other future proofing advice. Don't just buy the smallest place that you can afford. My sister was looking at buying a 2-bedroom house. However, they could stretch to a 3, maybe 4-bedroom house. The advice that I gave her and her partner was to buy a bigger home. And why would I say that? Well, firstly, you can afford it. The banks would not actually give you that money if they didn't think you could afford it. And secondly, and this is the most important, life changes. Today, it's just you and your partner. But in a few years, kids come along. Suddenly, that cute little starter home isn't cutting it anymore for your family. I've seen friends and neighbours forced to move sooner than they wanted to, purely because of that reason. It's stressful, it ends up being more expensive, and it's avoidable. Future-proof now if you can, and save yourself a headache later on. Moving on to the next section, most lenders let you have a mortgage up to the age of 70. So if you can stretch a 40-year mortgage, then go for it. And why I recommend this is because it gives you breathing room. If your finances fluctuate, I don't know, you might lose a job for a month, the higher mortgage payments that you would pay with a shorter term are now not being forced upon you. And the beauty here is that you can make overpayments. Let's say for argument's sake that you're going to have a 30-year mortgage payment. That 30-year mortgage payment's going to cost you £1,200 per month. However, you've got the option of a 40-year mortgage term, which will cost you £1,000 a month. Once you get the mortgage, you can just overpay £200 a month at the same value of £1,200, and all of a sudden, you've legally got a 40-year mortgage term. But if you're overpaying by £200 a month for the rest of the term, you will actually pay off the mortgage in 30 years' time. So give yourself that breathing room by maximising your mortgage term. So that's it, my brotherly take on buying your first home. Hopefully that's helped you, and if it hasn't, hopefully it hasn't offended you. If you found this useful, hit that subscribe button and drop me a comment with your thoughts below. Thanks for tuning in. See you next time.